After many hours of research, writing, and editing, I've finally completed this video that I've been working on for a long time now. One of the most popular questions I get is how am I able to find monthly dividend stocks? They're by far the most attractive kind of investment for people who are looking to live off of dividends. And so I've been wanting to create a resource for people who want to know which stocks currently pay dividends on a monthly basis, which is what this video is all about. Just a couple disclaimers before we get started. This list only includes monthly paying common stocks, so no preferred stocks nor any other kind of publicly traded investments like ETFs or exchange traded notes. This list is intended to be as a reference and not an in-depth analysis into any one company. Really going deep into every single company on this list would just take way too much time for just one video. Be sure to do your own research before investing in any one of these companies. We're not going to spend more than about a minute on each company as we've got about 45 to take a look at today. I'm not going to try to make it too boring as the majority of these companies on this list are financial or real estate related, but there are a few unique companies though, specifically in aviation, farming, and water recycling. As of the making of this video, everything here is up to date, but companies can switch from monthly dividend payments to quarterly at any time. So if you're watching this video, say 6 months or so after being posted, be sure to double check to make sure that the company is still paying dividends monthly. I want to say about 5 or 6 companies switched from paying monthly dividends to quarterly during the pandemic, so this list is shorter than if I would have made it about a year ago. For example, American Finance Trust switched from monthly payments to quarterly payments, and Chorus Aviation stopped paying dividends altogether during the pandemic. Because this information changes, I plan to release updated versions of this video maybe every year or so if this video vanishes, it's probably been replaced with a more updated one. Lastly, for this list, I'm going to be going in alphabetical order, so these stocks aren't ranked or anything by dividend yield or performance or my most favorite or anything like that. This video took a significant amount of time to research and put together, and so I hope I didn't leave any companies out. If I did, feel free to leave a comment below. If this video provides you with any sort of benefit, please consider giving it a thumbs up and subscribing for aggressive dividend investing videos. Now with that being said, let's get this list started. Agree Realty Corporation, ticker symbol ADC, is a publicly traded real estate investment trust primarily engaged in the acquisition and development of properties net leased to industry-leading retail tenants. As of December of 2020, the company owned and operated a portfolio of 1,262 properties located in 46 states. As you can see, they own properties for a lot of large brands including Walmart, Tractor Supply, and Dollar General, among others. Agree Realty just switched from paying quarterly dividends to monthly back in January of this year. They've been able to grow their dividends for the last 9 years as of the making of this video, and they currently offer a dividend yield of 3.85%. Their last dividend was for about 22 cents per share. AGNC Investment Corporation, ticker symbol AGNC, operates as a mortgage real estate investment trust in the United States. The company invests in residential mortgage pass-through securities and collateralized mortgage obligations for which the principal and interest payments are guaranteed by a United States government-sponsored enterprise or by a United States government agency. AGNC currently has an investment portfolio of $87.5 billion, with the majority of that being in 30-year and 15-year fixed mortgage-backed securities. They do invest in non-agency MBSs, but they only make up about 2% of their portfolio. As of the making of this video, AGNC offers a dividend yield of 8.91% and it pays a monthly dividend of 12 cents per share. Armor Residential REIT, ticker symbol ARR, is another mortgage REIT that invests in residential mortgage-backed securities. The company's securities portfolio primarily consists of United States government-sponsored entities, or GSEs, and the Government National Mortgage Administration's issued or guaranteed securities backed by fixed-rate, hybrid adjustable rate, and adjustable rate home loans. Armor's investment portfolio, according to their website, is almost all agency securities, which is good, but this is a company that has continued to experience financial difficulty for years, posting huge losses in revenue over the last 3 years. While it does offer an 11.09% dividend yield, they have had a history of cutting it. So hopefully better days are going to be ahead for this company going forward. Grupo AVAL Acciones y Valores, sorry for the mispronunciation, I probably butchered that. Ticker symbol AVAL provides a range of financial services and products to public and private sector companies in Colombia and throughout Central America. The company offers deposit products and services such as checking and savings accounts, cashier checks, and collection services. They employ more than 70,000 people internationally and they're headquartered in Colombia. Their stock trades on the New York Stock Exchange and it has since 2014. They actually operate 4 different bank segments in Colombia and provide lending services in many different countries, including El Salvador, Nicaragua, and Honduras. Their stock currently offers a 4.96% dividend yield, and it pays roughly 2 cents per share every month. Banco Bradesco, again sorry for the mispronunciation, ticker symbol BBD, is a Brazilian diversified bank that provides various banking products and services to individuals, corporations, and businesses in Brazil and internationally. Banco provides savings deposits, mutual funds, and a range of loans and advances including overdrafts, credit cards, and loans with repayments and installations. They're one of the largest financial groups in Latin America with total assets of more than 1.7 billion Brazilian reals and 71.2 million clients around the world. They were founded back in 1943 and they've grown pretty significantly since then in terms of the amount of services they offer. Their stock trades on the New York Stock Exchange and it currently offers a dividend yield of 2.79%. Broadmark Realty Capital, ticker symbol BRMK, offers short-term first deed of trust loans secured by real estate to fund the acquisition, renovation, rehabilitation, or development of residential or commercial properties throughout the U.S. The company is structured as a mortgage REIT and has been traded on the New York Stock Exchange since 2019. According to their latest investor presentation, Broadmark has invested over $3.1 billion since being founded in 2010 and currently have an active loan portfolio of $1.3 billion. Every loan is made up of senior secured, which is considered safer than unsecured loans. They've continued to grow their loan portfolio year over year since 2014. Right now, their stock offers a dividend yield of 8.26% and it pays a monthly dividend of 7 cents per share. Cross Timbers Royalty Trust, ticker symbol CRT, operates as an express trust in the United States. It holds 90% net profit interests in certain producing and non-producing royalty and overriding royalty interest properties in Texas, Oklahoma, and New Mexico, and 75% net profits working interest in 4 properties in Texas and 3 properties in Oklahoma. Cross Timbers Royalty Trust was founded in 1991 and they're based out of Dallas, Texas. Cross Timbers is just one of several companies on this list that are structured as royalty trusts. So one thing to keep in mind with these is that the amount of dividends a royalty trust pays to shareholders heavily relies on the performance of oil. As you can see, the amount of dividends you'd receive each month swings pretty significantly, which is something to keep in mind if you're looking to live off of consistent monthly income. Dream Office Real Estate Investment Trust, ticker symbol DRETF, is a Canadian REIT that trades in the over-the-counter markets in the United States. They own and operate a portfolio of upscale office buildings located throughout Toronto, Calgary, Ottawa, Saskatchewan, and Gatineau. As of the making of this video, their website shows they have about 133 office properties, all of which they describe as being
luxurious.
As you can imagine, due to the pandemic, the office REIT sector hasn't been performing all too well as of recently. Additionally, another thing to keep in mind is that this stock is very thinly traded, so be careful about buying too many shares if you happen to be interested in this company. This stock currently offers a dividend yield of 4.32%. Dream Industrial Real Estate Investment Trust, ticker symbol DREUF, is another Canadian REIT that trades in the over-the-counter markets. This one is also owned by the same Canadian company, Dream. Dream Industrial owns and operates a diversified portfolio of high-quality industrial real estate throughout Canada, the US, as well as Europe. It's a much bigger REIT than Dream Office as they currently have 215 assets that make up a total investment portfolio value of over $4.7 billion according to their website. They also have a 98% committed occupancy as well, which is pretty impressive. This stock is still thinly traded much like Dream Office, which is something to keep in mind, and right now it offers a dividend yield of 4.3%. Ellington Financial, ticker symbol EFC, acquires and manages mortgage-related, consumer-related, corporate-related, and other financial assets in the United States. The company acquires and manages residential mortgage-backed securities, or RMBSs, and it also provides collateralized loan obligations, mortgage-related and non-mortgage-related derivatives, corporate debt, and equity securities, among other services. As of last year, Ellington Financial has over $10.8 billion of assets under management, which focuses on high-yielding, short-duration loans. Their capital allocation is roughly 86% credit and 16% agency RMBSs. Their stock currently offers a 9.79% dividend yield, and it pays 15 cents a month. Their dividend was slashed during the pandemic, but it's since fully recovered. Exchange Income Corporation, ticker symbol EIFZF, is a Canadian aerospace company that trades in the over-the-counter markets in the US. The company operates through 2 segments, aerospace and aviation, as well as manufacturing. Their aerospace segments provide aircraft and charter services and emergency medical transportation services to rural communities throughout Canada. Their manufacturing segment manufactures window wall systems used in a wide variety of construction projects. This company definitely stands out on this list from the others, which I'm sure you're probably aware of by now. The vast majority of these companies are either financial or real estate related. Unfortunately, it's a very thinly traded stock, which is something to keep in mind if you're interested in investing in them. A thinly traded stock means that it can be difficult to sell all of your shares quickly if you need to sell them. This stock currently offers a dividend yield of 5.09%. ERP Properties, ticker symbol ERP, is a specialized REIT that describes itself as being an experiential real estate company. What that basically means is EPR Properties invests in properties that provide entertainment to consumers. So they own Topgolf driving ranges, movie theaters, ski resorts, a casino, lodging with indoor water parks, among many other types of entertainment venues. On top of that, they also invest in private schools and early childhood education centers. This company was hit pretty hard during the pandemic as they stopped paying dividends for over a year. However, they're back to now paying dividends monthly again as of July of this year. They did cut monthly payments to 25 cents per share per month, which is what it currently pays. It does offer a dividend yield of 6.08%. Gladstone Investment, ticker symbol GAIN, is a business development company focused on acquiring mature, lower middle market companies with $20 million to $100 million in revenue, attractive fundamentals, and strong management teams. Investing alongside both management teams and independent sponsors, GAIN typically provides most, if not all, of the equity and debt capital required to close a transaction. Gladstone Investment invests in companies in the manufacturing, consumer products, and business sector services. This is definitely a much smaller BDC when compared to others like Ares Capital, and roughly 30% of their investment portfolio is made up of preferred and common equity, which kind of surprised me, as most BDCs I've come across typically don't allocate more than about 5% to this kind of equity. Not that it's necessarily a bad thing, GAIN does have a solid track record up to this point, it's just considered less secure than senior secured and senior second secured debt. Now you're not seeing double, this is Gladstone Capital, ticker symbol GLAD. Gladstone Capital is also a business development company owned by Gladstone, and if you're wondering what the difference is between the two, Gladstone Capital provides financing services for lower middle market companies, whereas the previous company we just looked at, Gladstone Investment, actually acquires an ownership stake in companies. So one provides loans and the other actually becomes an owner of the companies. Their investment portfolio is pretty well diversified among many different sectors, including transportation, aerospace, automobile, telecommunications, and more, which is really important for a BDC. It does currently offer a dividend yield of 6.9%, and it pays a monthly dividend of about 7 cents per share. Gladstone Commercial Corporation, ticker symbol GOOD, is a real estate investment trust that invests in single-tenant and anchor multi-tenant net leased industrial and office properties across the United States. Gladstone Commercial targets primary and secondary growth markets that possess favorable economic trends, diversified industries, growing populations, and strong employment. As of July 30th, 2021, they own a diversified portfolio of 121 offices and industrial properties located in 27 states and leased to 106 tenants. They've continued to grow their real estate portfolio at an average rate of 18% per year since their initial public offering. They offer a 96.5% occupancy rate and state that the occupancy has never dipped below 95% since their IPO. Their stock currently yields 7.07% and it pays about 13 cents per share per month. U.S. Global Investors Incorporated, ticker symbol GROW, serves as an investment advisor and an investment manager. They offer a range of different mutual funds and ETFs to investors, specializing in emerging markets and natural resources. To quote their website, "Our portfolio managers travel the earth researching opportunities and evaluating risk, all in the pursuit of exceptional performance." Right now their stock offers a 1.05% dividend yield, which was just recently increased by 50%, and it now pays at a dividend rate of 0.0075 cents per share. And that's pretty much all I'm going to say. Moving on, our next company is Global Water Resources, ticker symbol GWRS. This is a water resource management company that owns, operates, and manages regulated water, wastewater, and recycled water utilities primarily in metropolitan Phoenix, Arizona. As of December 31st, 2020, it serves approximately 66,000 people in 24,000 homes. As someone who lives near Phoenix, we greatly appreciate their services out here. This is another company that stands out on this list as there aren't any other water utility companies that pay monthly dividends. Right now their stock offers a dividend yield of 1.56%, which isn't much, but as you can see, this stock has seen some pretty impressive growth since about 2013, so that's definitely a good thing. Horizon Technology Finance Corporation, ticker symbol HRZN, is a business development company located in Farmington, Connecticut. They're not like your typical BDC in that they only invest in companies in the life sciences, emerging technology, healthcare information and services, and sustainability industries. Since 2004, Horizon has directly originated and invested more than $2 billion in venture loans to more than 250 growing companies. Just by taking a quick look at their investment portfolio, the majority of the companies Horizon invests in are in the life sciences and technology sectors. Some of these companies are pretty cool, like AccuVein, which developed an easier way to look into someone's veins, or Corinth Medtech, which developed the first resectoscope with integrated optics, light source, and complete fluid management. This is some pretty fascinating stuff Horizon likes to invest in. Their stock currently offers a 7.38% dividend yield. Inter Pipeline, ticker symbol IPPFL, is a Canadian company whose stock trades over the counter in the US. The company is engaged in the petroleum transportation and natural gas liquid processing business in Canada and Europe. They conduct business through 4 different segments, which are oil sands transportation, conventional oil pipelines, NGL processing, and bulk liquid storage. One thing to keep in mind is that Brookfield Infrastructure is currently in the process of buying Inter Pipeline, so that's something to keep in mind as we'll have to wait and see what they plan to do with this company. Their stock currently offers a 2.4% dividend yield. Unfortunately, back in March of 2020, their dividend was slashed by 70%, and Inter Pipeline has yet to grow it anywhere close to that amount. Itaú Unibanco Holdings, sorry for probably slaughtering that pronunciation, is a Brazilian bank whose stock trades on the New York Stock Exchange under the ticker symbol ITUB. This company provides a wide range of financial products and services in Brazil and internationally, including deposit products, credit cards, investment banking services, leasing, and foreign exchange services. They're currently the largest banking institution in Brazil, and they employ over 96,000 employees internationally. They have a presence in over 16 countries and have major offices in Sao Paulo, New York City, Dubai, London, Tokyo, among others. Their stock currently offers a 1.98% dividend yield and has a rather unusual dividend distribution schedule, as you can see here. Gladstone Land Corporation, ticker symbol LAND, is a real estate investment trust that invests in farmland and farm-related properties located in major agricultural markets in the US and leases its properties to third-party farmers. Their portfolio consists of 127 farms, which is comprised of approximately 94,000 acres in 13 different states, valued at approximately $1 billion. Their farms grow a wide range of foods, including almonds, apples, figs, olives, pistachios, and blueberries. As of the making of this video, there's currently only 2 REITs out there that specifically focus on farmland, with the other being Farmland Partners Incorporated. Its dividend yield isn't spectacular at only 2.37%, but it does have some pretty good growth behind it. If you're super focused on diversification, this might be worth considering as you probably don't own any farmland in your investment portfolio. LTC Properties, ticker symbol LTC, is a real estate investment trust that invests in senior housing and healthcare properties primarily through sale-leasebacks, mortgage financing, joint ventures, and structured finance solutions, including preferred equity and mezzanine lending. Their portfolio consists of approximately 50% senior housing and 50% skilled nursing properties. According to their website, they have investments in 27 states and are currently invested in over 176 properties. LTC claims to be well diversified in the companies they invest in, and their stock offers a 7.19% dividend yield as of the making of this video, and they do pay 19 cents per share per month. Main Street Capital, ticker symbol MAIN, is a private equity firm that specializes in equity capital to lower middle market companies. I've talked about this company several times before on my channel, so if you're a regular viewer, you're probably familiar with them. They also provide debt capital to middle market companies for acquisitions, management buyouts, growth financing, recapitalizations, and refinancing. Structured as a BDC, Main Street Capital has a very well diversified portfolio among a ton of different sectors, including construction, healthcare, electrical equipment, and more. They have a pretty good track record in terms of growing their dividend over the long term. Plus, their share price has grown a lot over the years, which is pretty rare for a BDC. Right now, Main offers a dividend yield of 6.13%. I'm just going to briefly mention this next company, which is Mesa Royalty Trust, ticker symbol MTR. I couldn't decide whether or not I wanted to include it on this list because they have a pretty spotty track record when it comes to paying their monthly dividends. They were paying as usual up until May of 2020, but then they paused their monthly distributions, and then they started it again back in May of this year, but then they suspended it again in August. So I'll just briefly talk about them anyways. They own net overriding royalty interests in various oil and gas producing properties in the US. Mesa Royalty owns interest in properties in Kansas and the San Juan Basin field. Yahoo Finance says they have a dividend yield of 5.15%, but again, who really knows how accurate that'll be going forward. Realty Income, ticker symbol O, is a real estate investment trust and probably the most well-known REIT out there, especially if you watch this channel often. Realty owns over 6,700 properties across 58 different industries. They're a triple net lease REIT and currently own a large amount of 7-Eleven, Walgreens, and Dollar General stores. Realty's paid 614 consecutive monthly dividend payments to shareholders and have increased their dividends for 96 consecutive quarters. You can see they've also averaged an annual return of 15.3% since being listed on the New York Stock Exchange in 1994. They're actually the third best performing high dividend stock of the last 20 years, which I just discussed in a previous video. Right now their stock offers a dividend yield of 4.37%. Unlike the previous stock I just talked about, which is known for solid long-term growth, this next one we're going to take a look at is the exact opposite of that. Orchid Island Capital, ticker symbol ORC, is a mortgage REIT that invests in residential mortgage-backed securities, or RMBSs, in the United States. The company's RMBSs are backed by single-family residential mortgage loans, which are referred to as agency RMBSs. Currently offering a massive dividend yield of 15.79%, Orchid Island pays roughly 7 cents per share per month. However, as the old saying goes, if it sounds too good to be true, then it probably is. And Orchid has a long history of losses, both in their share price and their dividend distributions. They've cut their dividend 3 times in the last 3 years. Make sure you don't chase ultra high yields here without understanding the risks involved. Oxford Square Capital, ticker symbol OXSQ, is a business development company that invests in both public and private companies. It invests in secured and unsecured senior debt, subordinated debt, junior subordinated debt, preferred stock, common stock, and syndicated bank loans. Oxford primarily invests in debt and/or equity securities of technology-related companies that operate in the consumer software, internet, and information technology infrastructure sectors. This is another example of a company with a very high dividend yield that's also pretty high risk. As you can see by this stock's performance, Oxford Square has continued to struggle. Plus, their dividend has been cut 3 times in the last 5 years. Revenue over the last 5 years has also been on a mostly downward trend. So most of the news here just really hasn't been that good, just like Orchid Island. Pembina Pipeline Corporation, ticker symbol PBA, is a Canadian company that provides transportation and midstream services for the energy industry. It operates through 3 different segments: pipelines, facilities, and marketing and new ventures. Their pipelines have a transportation capacity of 3.1 million barrels of oil equivalent per day. They also buy and sell hydrocarbon liquids and natural gas originating in Western Canada. Pembina isn't structured like a royalty trust, unlike a lot of other oil companies on this list. They currently offer a dividend yield of 6.22%, and so far they've had a pretty solid history in terms of growing their dividend. They've also been able to maintain and grow their dividend since 1998. According to Seeking Alpha, their 5-year dividend growth rate is roughly 7.13%, which is pretty good. Permian Basin Royalty Trust, ticker symbol PBT, is a royalty trust that holds overriding royalty interests in various oil and gas properties in the United States. They're based out of Dallas, Texas, and they own royalty interests in various properties throughout the state, including Dune, Junkins, McKnight, and Tub Fields in Crane County, Texas. Something to keep in mind is that because this company is a royalty trust, the amount of dividends this company pays depends heavily on the performance of oil. That's just how royalty trusts are structured. So they're not going to pay the exact same amount in dividends every single month. Right now their stock offers a 3.38% dividend yield, but again, that all depends heavily on the performance of oil, which can swing pretty significantly. PennantPark Floating Rate Capital, ticker symbol PFLT, is a business development company that seeks to make secondary direct, debt, equity, and loan investments. PennantPark typically invests between $2 million and $20 million into each company, and the fund also invests in equity securities such as preferred stock, common stock, warrants, or options received in connection with debt instruments. Since being founded in 2007, PennantPark has invested over $13.1 billion into 566 different companies. They claim to focus solely on investing in more dependable sectors like government services, healthcare, software and technology, consumer and business services, while avoiding riskier industries like retail, restaurant, airlines, among others. They've consistently paid out about 10 cents per share per month since 2018, and it currently offers an 8.83% dividend yield. Choice Properties Real Estate Investment Trust, ticker symbol PPRQF, is a Canadian REIT that trades in the OTC markets in the US. They're the owner, manager, and developer of high-quality real estate whose portfolio consists of 725 properties, totaling 66.1 million square feet of gross leasable area. They predominantly own what they call necessity-based retail, office, and industrial properties throughout Canada, but a lot of their properties are located in Ontario. Much like the other Canadian OTC stocks on this list, Choice Property stock is very thinly traded, which is something to keep in mind as you might want to be careful if you're interested in building up a large position. PPRQF has consistently paid between 4 and 5 cents per share every month for several years now, and it wasn't too impacted by the pandemic. They currently give this stock a dividend yield of about 5.2%. Permrock Royalty Trust, ticker symbol PRT, is another Texas-based royalty trust that owns 80% net profit interest in the oil and natural gas production properties in the Permian Basin in Texas. Their properties comprise of 22,999 net acres, which includes 2,434 net acres in Hockley and Terry counties, 1,667 net acres in Terry and Cochrane counties, 14,727 net acres in Glasscock, Stonewall, and Coke counties, and 4,169 net acres in Ward, Crane, Terry, and Ector counties. This is a newer company being founded back in 2017. They suspended dividend payments starting in April of 2020, but resumed payments in September of that year, and they've continued to pay dividends every single month since then. Although like all royalty trusts, the amount they pay in dividends will vary each month, but they currently offer a dividend yield of 7%. Prospect Capital Corporation, ticker symbol PSEC, is a business development company that specializes in middle market, mature, mezzanine finance, later stage, emerging growth, leveraged buyouts, refinancing, among several other financial services. They invest in several different sectors including aerospace and defense, chemicals, conglomerate services, consumer services, retail, software, specialty minerals, among many others. According to their website, they currently have over $6.3 billion in assets, and they've invested in over 365 companies since their initial public offering back in 2004. They're currently invested in 124 companies spanning 38 industries that are all located throughout the United States. Right now, their stock pays 6 cents per share per month, although the dividend was cut back in 2017. This gives them a yield of 9.2%. Permianville Royalty Trust, ticker symbol PVL, can officially be considered a monthly dividend stock again after they suspended their dividends way back in July of 2020. They just recently paid a dividend again in September of 2021, and they announced a dividend payment in October of this year, so we'll wait and see if they'll be able to continue paying monthly dividends in the future. But Permianville Royalty Trust owns a net profit interest representing the right to receive 80% of the net profits from the sale of oil and natural gas production from properties located in Texas, Louisiana, and New Mexico. The company was formerly known as Enduro Royalty Trust, and they changed their name to Permianville Royalty Trust in September of 2018. It currently offers a 1.78% dividend yield. Sabine Royalty Trust, ticker symbol SBR, holds royalty and mineral interests in various producing oil and gas properties in the U.S. Its royalty and mineral interests include landowners' royalties, overriding royalty interests, minerals, production payments, and other similar non-participatory interest in oil and gas properties located in Florida, Louisiana, Mississippi, New Mexico, Oklahoma, and Texas. As I mentioned several times already, because Sabine is a royalty trust, the amount of dividends that they pay can greatly vary from month to month, and it all depends on the performance of oil. It currently offers a 7.73% dividend yield, but again, if you're looking for a consistent dividend amount every single month, you're not going to get that with a royalty trust. Stellus Capital Investment Corporation, ticker symbol SCM, is another business development company specializing in investments in private middle market companies. It invests through first lien, second lien, unitranche, and mezzanine debt financing, often with a corresponding equity investment. Stellus currently has $2.1 billion of assets under management and approximately 75 active investments. Since their founding, they've invested over $7 billion into more than 290 companies. Their portfolio consists primarily of business services, healthcare and pharmaceuticals, and aerospace. Their stock currently offers a dividend yield of 8.53%. Shaw Communications, ticker symbol SJR, is a Canadian communications company that offers wireline and wireless communication services. They currently offer internet, mobile phone, and TV subscription services, as well as provide a host of business services throughout Canada. They were founded back in 1966 and they're based out of Calgary. Shaw Communications was recently acquired by Rogers Communication, which explains why, as you can probably see, that SJR soared back in March of this year, as Rogers agreed to buy all outstanding shares of their stock. Their monthly dividend typically varies between 7 and 8 cents a month, and it's been pretty consistent over the last 10 years. San Juan Basin Royalty Trust, ticker symbol SJT, is the last monthly dividend-paying royalty trust on this list, which is good because I'm having a hard time distinguishing them and making them sound interesting. But San Juan Basin has a 75% net overriding royalty interest carved out of the Southland's oil and natural gas interests in properties located in the San Juan Basin in northwestern New Mexico. SJT is more unpredictable with their dividends compared to some of the other royalty trusts on this list. Looking at this graph of their dividend distributions, it's not uncommon for San Juan Basin Royalty Trust to skip some months in terms of paying dividends. As you can see, they've skipped 1 month this year, 4 months in 2020, and 6 months in 2019. SL Green Realty Corporation, ticker symbol SLG, is a real estate investment trust that focuses solely on acquiring and managing Manhattan commercial properties, more specifically office buildings. As of December of 2020, SL Green held interest in 88 buildings, totaling 38.2 million square feet. So if you've ever wanted to be known as a Manhattan real estate investor, then buying shares of SL Green is one way of achieving that. As you can probably imagine, the pandemic was especially tough for office REITs, perhaps even more so for New York City, as a lot of people described a so-called mass exodus out of the city back in 2020. But what surprised me was the fact that SL Green didn't cut their dividend during the pandemic. They actually switched from quarterly to monthly dividends in March of 2020, during the worst of the pandemic on the stock market. Since then, the company's actually raised it since then too, which is really impressive. Right now, their stock yields about 5%. STAG Industrial, ticker symbol STAG, is a real estate investment trust focused on acquiring and operating single-tenant industrial properties throughout the United States. By targeting this type of property, STAG has developed an investment strategy that helps investors find a powerful balance between income and growth. They were founded in 2010, and as of July, they own 501 buildings in 39 states. STAG likes to focus on properties that specifically handle e-commerce, such as fulfillment and online order dispatch centers. This is another company I've covered several times on this channel that I'm a pretty big fan of. To date, this stock has seen some pretty impressive growth in its share price, and they've been able to increase their dividends for more than 10 years, but as you can see, they only increase it by about less than a penny a year, which isn't a whole lot, but at least they are raising it. Right now, it does offer a dividend yield of 3.64%. SLR Senior Investment Corporation, ticker symbol SUNS, is a business development company specializing in investments in leveraged middle-market companies in the U.S. The fund invests in the form of senior secured loans, including first lien, unitranche, and second lien debt instruments. They typically like to make investments between $5 million and $30 million into each company. According to their website, SLR's investment portfolio totals roughly $368 million, which makes them one of the smaller BDCs out there in terms of net assets. They've invested in over 200 companies, and over 99.9% of their portfolio is made of secured debt, which I thought was kind of surprising, as only 0.1% is made up of equity securities. They currently pay 10 cents per share, giving the stock a dividend yield of 7.7%. Superior Plus Corporation, ticker symbol SUUIF, is another Canadian company that trades in the over-the-counter markets here in the US. This is an energy distribution and specialty chemicals company that conducts business in Canada, the US, and Chile. It operates through 3 different segments: Canadian propane distribution, US propane distribution, and specialty chemicals. They also provide sodium chloride to the pulp and paper industries. This stock has paid between 4 and 5 cents a month for each share for over a decade now. And one thing I've noticed about these Canadian stocks is that a lot of them seem to vary in terms of how many dividends they pay each month. I'm not really sure why this is the case, as I don't have a lot of experience in dividend stocks outside the US, but this amount does give Superior Plus a dividend yield of roughly 5.3%. TransAlta Renewables, ticker symbol TRSWF, is a Canadian company that again trades in the OTC markets. TransAlta develops, owns, and operates renewable power generation facilities. As of March 3rd of 2021, it owned and operated 23 wind facilities, 13 hydroelectric facilities, 7 natural gas generation facilities, 1 solar facility, 1 natural gas pipeline, and 1 battery storage facility. They provide their services throughout Canada as well as in a few US states and Australia. This company has had a pretty good amount of growth, as you can see. Their dividends haven't really changed since their inception, however, as it usually pays between 5 and 6 cents per share a month. Another thing to keep in mind here is that this stock is very thinly traded, meaning if you buy a whole lot of shares, it could potentially take a good amount of time to find a buyer for them if you need to unload them in a hurry. Whitestone is a community-centered shopping center REIT that acquires, owns, manages, develops, and redevelops high-quality open-air neighborhood centers primarily in the largest, fastest-growing, and most affluent markets in the Sun Belt. Whitestone seeks to create communities that thrive through creating local connections between consumers in the surrounding communities, as well as a well-crafted mix of national, regional, and local tenants that provide daily necessities, needed services, entertainment, and experiences. And although that sounds nice, Whitestone took a pretty massive hit during the pandemic. Their dividend distributions were reduced by about 60% in 2020 to where it pays now, which is 4 cents a share, and they haven't increased it since then. It's also a ways away from fully recovering back to its pre-pandemic price. It's currently offering a dividend yield of 4.3%. The last stock on this list is one I realized I accidentally overlooked earlier, which explains why it's misplaced here, but it's Eagle Point Income Company, ticker symbol EIC. This is a closed-end investment company that has the goal of generating high current income with a secondary objective to generate capital appreciation. Eagle Point seeks to achieve this by investing in junior debt tranches of CLOs, or collateralized loan obligations. The company claims that by investing in CLOs creates greater odds for higher returns, all the while protecting against rising interest rates and lower credit expense. They've only been around for a few years now, and as you can see, the amount they pay in dividends can sometimes vary from month to month. Right now it does offer a dividend yield of 8.18% according to Yahoo Finance. And that's currently all the US monthly dividend stocks out there that I'm aware of. If I missed any, please feel free to leave a comment below, but I'm thinking I got pretty much all of them. Again, this video was made to be as a resource for people who are looking for monthly dividend stocks. I know we didn't really have enough time to go too deep into any one company, so be sure to perform your own research and due diligence before investing in any one of these companies here. Alright everyone, that's going to wrap up today's video. Thank you all so much for watching, I really do appreciate it. If this video benefited you in any sort of way, please click the like button below and click subscribe if you want to see more dividend investing strategy videos. It would just let me know that there's a sizable enough audience out there who wants this kind of content, and I'll continue to provide you all with that content. Alright everyone, thanks again for watching and I'll catch you next time. Take care.